amount is less than $20,000, it will cost you 0.25% only. So it means if you are transferring around $1,000 to $20,000, if $1,000, you will be charged only $2.5 for that transaction. So $2.5 as compared to $37 or $38, because there is an exchange difference also. So there will be no exchange difference on that one. And immediately in 10 minutes, your money will be transferred. It will be faster, reliable, and cost effective. So different part of the world now, they are using different cryptocurrencies. In Brazil, they are doing grocery. You are doing groceries also on cryptocurrency. They are allowing, you know, the shops and everything like that. If you see that, if you can Google also check that how much exchanges are operating, around 67 or something exchanges are only operating in Brazil. They are doing too much transactions on Bitcoins or other kind of cryptocurrencies. Now, this is a small example. I will try to tell you that how the Bitcoin is going to work and how the ledger and distributed ledgers are going to be written. If you are transferring, you know, Mr. A want to send $100, 100 dirham to any place, and say that if there is a charges there, it will be charge you 2 dirham. So it will coming to around 98. If all intermediaries are there, there is transaction process, their turnaround round is there. These are the things, and it will take 1 or 2 days time maybe if you are transferring this one through banks. Now, in blockchain, it's an open distributed ledger. Say that there are 4 participants doing a transaction, A, B, C, D. A have already, the first record, A is owning 100 dirham, already they have 100 dirham. So it is the first transaction that it has a 100 dirham with them. A want to transfer to B 50 dirham. A transfer to B 50 dirham. Then the transaction will be, second batch will be coming is that A transferred B. First, you can see the first one. Then the second one is here. The first transaction will be starting in the ledger. Now B transfer 25 dirham to D. So B transfer, it will be the second transaction. First block is 100 dirham. Second block B transfer to C, this one. D transfer to C 10 dirham. Now this ledger which is there, it is open to everybody. Now if A want to transfer 75 to C, already 50 is transferred, this D transaction will not happen because everything is apparent to everybody. The ledger is open and distributed. There is no central. This one will not come. This all transaction is recorded. Each, the A, B, C, D are all the nodes. They are all the nodes. They will be retaining this all record. The last transaction, fourth, cannot happen. Why? 75. A, if want to transfer 70, because already have transferred. So this calculation is automatically done when in complex scenario, when Bitcoin are being transferred and sold. Now key points are: the ledger is open, distributed, chain of transaction open to the public, node transaction and verified, and concept of miner. Now here I want to just give you an idea what is the concept of miner. If in this transaction, let's say A and D are miner, what will be their job of the miner? When this transaction happen, that A transfer to B 50 dirham, this transaction is unverified for the time being. Somebody, miner, have to verify this transaction by solving a puzzle. What puzzle they have to solve is that one. If there is a transaction that say that B transfer to Mr. B transfer 25 to D. There is a transfer between, you see that there is already a transaction done, A transfer to B 50. When this transaction is done, they will generate a key. Each transaction will generate a key. Now the miner have to find this key and attach the next transaction to the first one. To find the key, they have to use the computational power, which is keep on guessing, because this key was, created randomly. So they have to use their computational power, their machine to compute. Now there will be competition between A and D. Whoever is going to be first, identify this key, they will get a reward. They will get some some percentage as a reward to verify this transaction. Once the verify the transaction is that second transaction will be attached to that first transaction. And this is the job of the miner. When that will be wide, then they will be verified. What will be the task of the A? A will confirm that B have verified that one. And it will be posted on the ledger. And when it will be posted on the ledger, simultaneously it will record it in A, B, C, D, all's ledger. This is the simple procedure for blockchain. Any question, somebody have query? Up till this is the main concept. You have to understand when you are coming over here, this is the simple concept, how Bitcoin transactions are working. Later you can study and you have more resources that other things are there, but this is a simple concept that how the ledger is open, distributed amongst all the participants, and in which 2 or 3 are miners. So each miner will try to solve the puzzles. They have machines and everything like that. Now, you know that billions of dollars have been spent when the prices on Bitcoin went rocket high. So the even point some sharing, they were getting very good rewards. They set up machines, they brought machines, they put it on Iceland because heat and electricity is being used too much. Anybody have an idea that how much electricity in 2018 the computational miner utilized in Bitcoin? Just to verify that, anybody have idea? They utilize the electricity more than 100 countries is using that one. The Bitcoin miners utilize the electricity more than the 100 countries have utilized in whole 2018. Yes. So the participant has to be a miner? No. Miners are, these are the participants. From participants, some people can elect to be a miner because there is a computational machines you have to provide and everything you have to get registered. No. Now you have ABCD and miner can be a person else. Yes. It could be, but miner has to be participant because these all nodes are being distributed between the participant only. Use case of blockchain in VAT. Now, see, this is not the country, nobody. This is because the prices become rocket high. So what happened? The people start mining. They start, even the institutions start open. The institutions, so many companies, incorporated. They said that small miners combined with because they have higher computational power. They want to make a group. But once the prices were $18,000, $17,000, even above $10,000, so they're getting enough money for that one. When the prices again drop down to, so you will not get that much money. And second thing is that one. Now later IBM introduced cloud facility for storage. Before it was stored in personal computers, PCs and everything like that. So with the passage of time, new machineries are there, new computational powers are there. So these are changing. So this basically the loss. Who invested in mining and everything, it was a huge loss for them. But Bitcoin and other things cannot perish. Iran's second currency is Bitcoin. Iran and other countries like Rwanda and other countries where their currency is too much fluctuation more than the Bitcoin fluctuation. You have to put one or two zeros, in front of their currencies. So these things are being kept in mind, and that's why you see that in Africa, one of the largest exchange, cryptocurrency exchange in South Africa. Then there is exchange in Nigeria, and then recently Kenya has opened an exchange, and they are working their platforms too much on blockchain. In Kenya, the next elections will be on blockchain. It was supposed to be in America also, the subsidiary, that election was supposed to be on blockchain technology, but it didn't happen. But in Kenya, the next election is going to be on, this will be on blockchain technology. Yes, yes, they are attracted to more Bitcoin, and especially I met, I had myself attending an event on blockchain on 6th of November last year in EY in London. And there was a guy who was practically doing, all these transactions. He was a parachuter in UK Army. Then recently he opened a company. He's supplying manpower, especially in different parts of the world, in Pakistan, Iran, and everything like that. His all transactions are on Bitcoin. Basically, now it was Notoshoki, some name were there, the enormous name. You remember that in 2008 when the crisis came. So behind this some forces are there, which they thought that this banking and these systems, are vulnerable, and they are, they have too much destruction. They introduced, no specific country is behind that one. Big corporations. Is backed by nothing. It's just a transitional channel, like it's a shareholding. There is no physical backing on that one. Yeah, that's why, it's not a commodity. It's not in America. Is their regulations are different. In UK, for treating for these are different. This is a medium of exchange basically being developed, and Bitcoin. That's why. Yes. It can go very high, it can go very low. That's why the way you are using, if you are holding as in value, if you are not holding as a value, you are using as a medium or transferring funds and other things like that. So you will not be exposed to that one. The thing is that one is for speculation, like shares goes rocket high and then it came back. Same happen in other so many countries, the currencies, and this are backing by this. Now see, nowadays, if you go back, there is no real value, because before, American dollar was backed by gold, it's not backed by nothing. And American dollar was about to crash down, that one, and they have alternate currencies, and most probably they are the one who they developed this Bitcoin also. Basically, the transaction, yeah, how you know? How you know it's not helping? Nobody knows that how much transaction, because the user are enormous. The people who are using enormous, everything like that. How you know that the who were the one who, how the prices went up and how they in cash and how who made the money on that one? You never knew. You know that America and other people are on the driving force. They can ban anything anywhere in the world. If it is not banned, so you must be wise enough that who is behind these things, that they could be a party. Basically the blockchain is an application technology, and which is on the basis of distributed ledger technology. Basically this technology was long before 2008 and 9. The problem of this technology was double spending. The double spending is that one, that similar transaction, however, can be used again. So
Yeah, so in other words, I mean, like Microsoft came in with the Windows, then again you are, I wanted the Sapphire. What you're saying is that this particular software or a technology has to be implemented by each level of supplier or
yes,
country
yes,
or
yes,
bank or
yes,
region
100.
or wherever.
You
So
are
until and unless, like suppose you have got 100 hospitals in UAE, each and every one implements it and then only it connects it to one another. That's when the information will get transferred.
I will make it little easy, not hospital, in supply chain. If supply chain is from scratch to that one. So
Okay.
now governmental level is high level already been implemented. By 2021, all the government department of Dubai will be on blockchain.
Correct. So
Like,
the
okay,
government has taken this option and they are implementing into their own
yes,
departments. So as far as the UAE government is concerned, all of them will be interconnected to one another and all information can be transferred from one another. The same would apply, and I mean, suppose we're going into the coffee bean concept.
yes,
The same would apply to a coffee bean
yes,
producer in
yes. It will take
Gujarati
time.
or
It will
anywhere
take
and
time
then
to
the
go
next level
down
and the
from the
next
level.
level.
It's, yeah,
Everyone takes on the same technology.
yes.
So we are creating some kind of a monopoly of that
Not
particular
monopoly. There
technology.
is been going to be a second language in the world like that. Like English, everybody must know English. Later on, you will see in next 5, 10 years, it will like a language. If nobody knows that one, you cannot survive. So blockchain basically will disrupting everything like that. Even the big key players, IBM, Microsoft, they have changed their platform. They are coming on blockchain. What is the reason? The reason is that when they adopted, like Android came, and Nokia is finished because they adopted very late. So these are the one. This is the basic language. You can see now for the case study of VAT, that in VAT you see that in VAT, in case study for VAT, that UE recently introduced VAT. And PwC, Deloitte, all the big fours are working on this basis, that VAT and every taxation has been recorded using the blockchain. They have hired thousands of people, EY and Deloitte. They are working only for these platforms. You can see that VAT, payroll, taxation, income tax, corporation tax, transfer pricing, all have been done to be working on a platform, this blockchain platform. Invoice been issued for simple transaction. We all know that VAT, how they're working. Invoices been issued, client bill, these systems are there. This all systems are being done when smart contracts are basic programs. What they will do is that one, in blockchain smart contract, automatically they will distribute the amount between VAT and non-VAT. And they will automatically deposit the money to be transferred auto execution to the government authorities. Like I give you an example that there is a buyer, there is a seller. Like say that this is a buyer and this is a seller and this is the bank and this is government. Once this transaction has been done to over here and there are 4 participants. In this participant, one will be the major who will be authorized to, when they authorize only, it will be written on the block. When there are 4 participants, the ledger is distributed. Buyer and seller, there is a VAT giving to the government bank. The bank have to confirm, these two banks, buyers and seller, that they send the money, they receive the money, and the government have to be verifying that when they receive their portion of tax. It could be custom duty, it could be everything like that. So sooner or later, these platforms will be available internationally for all the companies, and they will be obliged to work these platforms, softwares. All the software eventually they have to transform or become obsolete. The reason is that when the platform, it can be this SAP, Oracles and everything will be abolished, like same like Nokia and other things. BlackBerry has, been, now vanished. So these things are now, these technologies, this now Thailand already is working on that one. They are implementing practically, I think in next 6 months or 4 months, they will start implementing, starting from this big, companies. So these transactions have been done to verified with the government. Once the platform like in Dubai is moving very fast, Estonia, Dubai, these are the the countries which are working very fast and doing on this thing on blockchain technology. So the platform is ready to launch, the launching pad is ready to be, intake all the companies and other things. Administrative burden will become lesser. These are some ease to track flow of transaction, real time using DLD. Self-executing smart contract reduce the risk of fraud and mistakes. tamper-proof and permanent record is stored, immediately insight to the company's financial, high speed of money transfer between the businesses and the government, VAT fraud drastically reduced because single system allow and then the auditing become very lesser, you know, the auditing and everything, because everything is verified. So the task of auditor become, you know, now later on stages there will be no chartered accountant if they don't have the knowledge of IT, no engineer, no doctor, nothing. So it is all combined with the knowledge of IT. If somebody doesn't have the basic knowledge, it's like a language. Like you don't know English, you cannot operate. So same thing is going to happen now. If you don't know the technology, even you are a doctor, if you are an engineer, you are a chartered accountant, you are useless.
If you're a modern criminal, chances are you've used it to buy guns, drugs, and even launder money. Sounds dodgy.
But high-profile institutions such as USAID and UNICEF have a different view. They think it could be a force for good, helping the poorest people in the world. It's a technology called blockchain, a global online database that anyone, anywhere, with an internet connection can use. Unlike traditional databases, which are owned by central figures like banks and governments, a blockchain doesn't belong to anyone. And with an entire network looking after it, cheating the system by faking documents, transactions, and other information becomes near impossible. Here's how it works. Blockchains store information permanently across a network of personal computers. This not only decentralizes the information, but distributes it too. So how can a multi-purpose online database whose users include criminals work for everyday use? How does it stay relatively hack-proof? The answer is blockchain's millions of users. They make it difficult for any one person to take down the network or corrupt it. The many people who run the system use their own personal computers to hold bundles of records submitted by others. The records are known as blocks. Each block has a timestamp and a link to a previous block, forming a chronological chain. It's like a giant Google Doc with one key difference. You can view it and add to it, but you can't change the information that's already there. The blockchain enforces this by using a form of math called cryptography, which means records can't be counterfeited or altered by someone else. Blockchain's most famous application is Bitcoin. It's a digital currency that is created and held electronically, and you can send it to anyone, whether you know them or not.
Bitcoin provides a level of anonymity we've not seen in modern times. That's because, unlike credit cards and PayPal payments, there are no middlemen such as banks and financial institutions asking for our personal information and home address.
Instead, people from all over the world move the digital money by validating other people's Bitcoin transactions, earning a small fee in the process. Where the blockchain comes in is verifying the ownership of this digital cash and making sure only one person is claiming it as their own at a time.
Banks and businesses are rushing to adopt blockchain database technology.
Found that 28% of respondents had invested $5 million or more in blockchain technology. 10% had invested $10 million or more.
But why are they spending so much money? Well, to save money, of course.
When this study looked into the data of 8 of the world's largest investment banks, it found that blockchain could save them between $8 and $12 billion every year.
Bet that $5 million investment doesn't sound so bad now, but it's not all good news for the big players, of course.
Blockchain lowers the barrier for entry into the banking industry, and that means fintech startups are popping up in pretty much every market they operate in. If banks and companies can't keep up, they're putting their own survival at risk.
For the consumer, the future seems brighter with more security, less cost, and better experiences.
Yet, blockchain could be the biggest game changer for the poorest in society. The technology is open to people living in low-income countries or fragile states at risk of economic collapse. Take a farmer with a small plot of land which is then flooded. The paper copy of the deeds to his land is washed away, resulting in the farmer having no proof of owning the land. Or perhaps he does have a digital copy on a government database, but it is erased, altered, or even destroyed in a political coup. If the farmer had filed that deed on a blockchain, he could have avoided all these problems. Along with speeding up the flow of cash and providing a secure place to keep records, the benefits for the poorest in society are enormous. From protecting our identities to running autonomous vehicles to managing a world that is increasingly dependent on the Internet of Things, the possibilities of blockchain technology seem endless. But whether it lives up to its promise remains to be seen.
How much banks and they are investing, investment companies are investing on blockchain, especially this technology. So it is we have to adopt this technology as soon as possible, faster, because it will disrupt each and everything like that, and whoever doesn't have this knowledge will be out. And the reason is that one, like, you know, in banking, it is estimated by 2021 the KYC and compliance department of the banks will be abolished. Why? The reason is that one, there are companies open like ID. There is a, you can see on the website is ID 2020. It's a United Nations program, ID 2020. 60% population of the world doesn't have their any ID of that one. And that's why they cannot use the bankings and other resources. So the United Nations effort is that they want to have everybody in this world have an ID. And second thing is that there is a company incorporated in UK and other part of the world. What they are doing is that one, they will be providing an ID information, and it will be all interlinked. Like when you are born, so you will have a birth certificate. It will be a chain like that and verified from the hospital. Then when you go to school, your certificate will be, you know, they are on the blockchain. Schools, universities, all they will verify your, you know, school certificate, university degrees already. Like I think 50 or 60 universities in America, they are on blockchain verifying. The document can be verified from that one. So these things all will be verified. Then your bank, your credibility. So that ID you will be using to create email address, Facebook account, Twitter account, or even when banks, they need information, you will be providing from that ID which is been verified from different sources. So once there is an information which is verified from different parts, like your credit cards, your credit history, your birth certificate, your education, so no need for the KYC will be required for the banks and the compliance. So 30% of banks, all resources have been used for KYC and compliance, which will be abolished sooner or later. It may take not 1 year, 2 years, it may take in down like 10 years or something like that. Very interestingly, you know, when I start studying on blockchain, it was last September. And from last September, I am surprised that things have moved very fast and unimaginable. Now, I never thought that, you know, there will be, you know, platform already which Pakistan will be using for using the blockchain technology recently. You know that Alipal, this Alibaba's group, they have already signed with this one, and now it is around Malaysia and Pakistan is $1 billion will be transferred. So it will be transferred through EasyPaisa and Volview. Both are the owner is this Telenor corporation. So you can understand how much time will be saved and how much money is lesser will require. Like that land registry has been, you know, asked, and that land registry in department, and I will show you something like that in real estate, what difference they are making. You know, this blockchain technology, because DLD is already implemented. Now this real estate, all the companies, everything, they are already going on blockchain. What will expedite the process, reducing the fraud, offering total transparency. Intermediaries like, you know, broker, these things, they will be, you know, abolished sooner or later. Already DLD, they are saying that they want to reduce the, I think 4% charges to some other charges. Why? The reason is that when DLD was doing this processing, it was taking 4 days, it's taking only 4 hours. and it is interconnected. DIVA has spent, I think they have signed one of the biggest contract, DIVA, in Dubai on blockchain technology. They are the one consultant, that one. So it will be on similar platform. One of the main reasons that buyer-seller have traditionally used escrow and third-party verification to reduce the chances of either party getting burned by the real estate fraud. So there will be no requirement for the escrow account because it is verified. The payments and everything like that, they are the intermediaries and things will vanish. Using the blockchain, people can create digital IT for real estate asset as well as themselves as the buyer-seller. In this, the mortgage process and transfer ownership could be seamless and much faster than today. For the buyer, their credit history, income can be instantly verified as well because they are on the blockchain. You are individually on blockchain. So if I'm the buyer, I want to buy, you know that you are the seller, you know that you can check my credit history. No need to go to the banks or rely on that one mortgage. I know that, okay, you will pay me in installment, whether you can pay or not. These are the things are verifiable. Homeowner could be able to prove owner of their property backed by their easily, like, you know, in our country, especially in Pakistan, there's something file has been saying same plot has been saying, you know, sold to 3 or 4 people. These things are be tampering done in third world countries. So many things happen that you own the land and you are not owning the title deed. Dubai Land Department, what they are doing is that the blockchain distributed data will maintain a continuously growing list of record called blocks. Dubai Land Department employing the blockchain in 3 initiatives: ownership verification, DLD, mobile application, property sale by the developer, smart leasing process, targeting the improvement of providing the services, improve the collaboration with other parties involved real estate market to create a secure digital asset. So no need to go to DIVA, no need to go for anything like that because already the information will be there that this plot has been this assigned and these things will be in hours. Your DIVA connection and other connection will be available in hours. Dubai Smart City, you know that there is Smart City project is that by 2020 there will be paperless and everything will be on blockchain, the government processes. Now, anticipated long-term benefit make blockchain highly relevant. What are these benefits? That reason for a bank to invest in blockchain? What are the reasons? Lower friction and administrative costs, which I have shown that lean process, high security standard, faster transaction. Because the blockchain is the secured one. This private key and public key, if you have a time, we are not going in depth for that, how they operate, is the secured one, is the most secured one. That recently has this happened in Pakistan, a fraud, you know, Bengal Islami. Their system were down. So these banks are not updating their systems. So they will be losing and they will be out. Even, you know, big people in consultant are saying that transparent real-time data create major operation benefit user, more efficient settlement transaction process could occur as everyone see the same data because everybody is saying the same data and all the nodes. By Oliver Wellman. The long-term opportunity of bank is to repoint operational risk finance to blockchain base. Big banks can leverage blockchain to streamline operation and cost while improving the service and products. Now these are the something which are going currently in the world. You can see that in China, this Wang Yang group use blockchain technology, a part of 30 billion. They are developing a city in which all Silicon Valley, they have developed a city with a cost of $60 billion in China, where developers are there continuously working. There are different, you know, I think millions of white paper concept are there, which they are selecting the concept paper. That concept paper is the one that if I want to develop a, you know, something on blockchain, I have a concept, that is white paper. When concept paper, I could submit to these people, you know, they're sitting over there. If they like my concept paper, they will fund me that one. Just giving you an example that when I started a blockchain, it's not to disclose. One European company have contacted me. They want to invest, you know, take shareholding with me and invest around $2 million on the project, which we are going to start that one. So these are the ones, they have crowdfunding. Crowdfunding, they do that funding for different projects, like they will do for 20-30 projects. So even from 20-30 projects, maybe 90% will fail, but once their 2-3 project will click, they will make lot of money on that one. So what they are doing is that they have spent $30 billion for the reason they have, established a city in which all progress has been done. It was done in 2017, not now. So you can see how much they are doing. And then it's coming in Dubai, their smart Dubai. After Estonia, Dubai is the place in which the government is involved in all these things. Only thing is that when still they didn't approve for these exchanges to be incorporated. They are thinking to incorporate the exchanges and start the ICOs like IPOs. It will be ICOs on exchanges. Microsoft project, Fastman track product, initiate with that low cost ITOs and this audit, finance, these all the things in logistics they are doing. You can see smart cities. So many products and projects are going on blockchain. Current collaboration. Current call in the world to make blockchain real business. What they are doing is then in banking, the blockchain is being used in trade finance, digital identity, international payment. In financial market, clearing and settlement, know your customer, KYC, which I have already told you that in insurance complexes, and you can see name over there, like electronics, which was saying their provenance tracking. Already Nike, Adidas, they have already ordered their softwares to be developed on blockchain. So today if you are buying some expensive products of Nike product, you can put from your mobile app, everything like that, their the code which is appearing on that way, you will know that it is genuine or not. Blockchain use cases, industries and pattern. You see that what companies and they are using here. You see VTrade. VTrade is an application which is developed for the banks for trade finance. IAG, Standard Chartered, they are doing trade finance, pre-post. You see that fraud and compliance institute, Smart Dubai, Safety, Walmart. Walmart in 2019 will be going on blockchain. All the Walmart chains. Like Carrefour already, yes, 3 days before Carrefour have also signed that one. Similar agreement. So these things are disrupted. When these disruptive technologies are there, you can understand how much disruption blockchain is going to bring. Demand for blockchain engineers have been grown 400% since end of 2017. Now, as I have already mentioned, there are two types of blockchains: public and private. Private, in which carry out the transaction, who is carried out, who is validating, and who created the. Blockchain technology is disrupting. One of the reasons is that it's open source. That coding and everything you can use. There is Hyperledger and other which have been developed. That one you can use yourself if you know how to trigger this formula. And second important thing is that millions of people, they are using their platform. So once there is bugs is coming, they are reporting there. So immediately a patch have been developed. Now, for business point of view, retail banking have adopted several blockchain applications. Already it's in place. Application is smart contract. Smart contract, everybody understand, is a programming language. In blockchain, it's a smart contract. It's not a contract, but a smart contract. It's called. In trade, smart properties, notary services, bonded identity, you send revolution in mortgage, digital ID management, efficiency, focus. Trade finance for blockchain. Now, trade finance, blockchain, what is providing blockchain facilities, trade finance is ease of documentation. I will skip that when you see that is from buyer to exporter, there is so many, process going on, documentation, LC, logistic. They are using with a combination of IoTs, RFIDs, this RFID to track the things. Like I give you an example that we ordered an ice cream. When the ice cream trucks arrive, we have the data from where we come to know that during the transaction when ice cream was brought, the truck was broken down, it stopped the cooling, and then after half an hour it was repaired. So when I have the data, I will reject that consignment because it is already in the blockchain. It will be shared with me as a as a customer. So these things, when we recording, is continuous recording the heating procedure, IoTs divided, IoTs are combined with blockchain. In this one, you see that real time that current main challenges trade finance revolve around document trading, handlings. These challenges arise from high level of participation, no standardization and legal requirement. The cases IoT monitor could be add significant value are low cost monitoring RFID or of high volume freight, high tech monitoring of expensive and sensitive freight, medicine. The cases where blockchain could add significant value are smart contract for automatic settlement and all other documents. In complexity and normal case, this is between importer and exporter. These are the procedure going in documentation. They will courier, import, there will be custom at export, there will be custom at import, banks will be involved, correspondence bank will be involved. You know better than me how imports and exports, you are all now there are four more main processes in trade finance. How this commercial transaction, import exporter, trade financing, transportation and official control measures. You can, this is so small, these are the so big list of documents which is required for a single import and export. Let's see how IBM is going to work on that one.
Hello from IBM Research. In this video, we're going to show you one of the examples of blockchain applications we're working on. This application is trade finance. Conducting international trade today requires a number of participants to interact with one another, like exporters, importers, banks, shipping and ground transport companies, port authorities, and even customs officials. It involves a complex maze of regulation and lots of document-based manual processes. So today, it is kind of ineffective and it adds time and expense to the process. In this demo, we will consider the flow of goods, in this case flowers, from an exporter in Malaysia to an importer in Germany. As these flowers move between the two parties, a number of events occur and recorded. Documents like letter of credit, bill of lading, and phytosanitary certificate are generated and registered on the blockchain. This again creates a distributed trusted ledger that cuts across all of these different parties. In the blockchain network in this example, validation nodes are configured to be some of the parties I already mentioned: the shipping company, International Shipping, the importers bank, Bank of Berlin, and the ports authority, Port Keeling and Port of Hamburg, were set as validator nodes in this setup. All other parties involved in the process are granted either authorship or viewership of the data in the blockchain ledger. Now let's go to the demo. On this screen you can see the International Shipping's view. These are the international trade transactions that are currently in progress. The pink location markers track the current state of each transaction. So to initiate a smart contract, the Bank of Berlin first creates a letter of credit. Usually, letter of credits provide foreign exporters a guarantee of payment before they go ahead and produce or harvest for importers. Here, a letter of credit may be generated by the bank's backend systems and stored in the blockchain, but in this demo here, we show it being created more manually for demonstration purposes. When the Create button is clicked, you can see the blockchain consensus protocol running and all four nodes automatically validating the transaction before it is added to the blockchain. When the exporter Malaygrow and its bank, the Bank of Malaysia, accept and view the letter of credit, a receipt is also registered on the blockchain. When the ordered flowers are ready to be shipped, the next step is to have them inspected by a National Plant Protection Organization, or NPPO, to make sure they meet import requirements. Positive outcome of this inspection means a phytosanitary certificate is issued, and again it is registered in the blockchain. This shows how the blockchain can be used not only for recording events, but also for storing data such as documents relevant to the process. Note that as an exporter, Malay grower can only see transaction records of when they accepted the letter of credit and when the phytosanitary certificate was issued. They are not able to see other transaction records, for example, of the creation of the letter of credit event, which is private to the importer and the importer's bank. Back to the demo. Once the inspection is done, the containers are sealed and bills of lading are issued for the transport of these containers. In this case, the International Shipping Company is the creator of bills of lading. This step can be made simple or even automated by combining data from backend systems with data that are already stored in the blockchain. Again, the event that has to do with the creation of bills of lading would be going through the same automatic validation process as the previous steps to make sure the validity of the transactions authored in the blockchain.
Anyhow, this one is this. You see that in each and every stage, they are recording within, and everybody who is the participant can see, but not all the information. Like information regarding government banks are limited, and then they have a limited access. So these things, when is already IBM is working on that one, implemented in Merck's and other companies, they have ordered that one. So you can see that how the trade finance will become more efficient and less time will be required on that one. And because of the shortage of time, I will be going through the last one, that some things are there. That future, that so many things are there, the government, Dubai government, what they are doing. So what you have to do, get certified, have to learn these educations, and thank you very much. I will end this presentation over here. And I hope that this session would have been informative to you and some understanding, not all, that concept that what blockchain is and how it is disrupting. So I will now, anybody have some questions, I will try to answer. Big data is different. The blockchain basically have you in the start. I have told you that after internet, this is the second. All the information which is available. Big data is information only available. Your likeliness, like that companies different. They hire from. They get information from what you like, how the things they react. These are. Blockchain basically is certifying and verifying the information. Authenticated, and it is decentralized. Nobody single person is controlling that one. See, in like if I try to answer your question, the ID one also, the universal, when you have universal ID, nobody can use as a big data unless you allow that one. Because you will be owning your ID and your information, how much information you want to supply to whom. So even you can say like you need a loan. So if you need a loan, you ask the people that 10, 15, the broker will contact you that okay, that you require, because you will be holding your IDs. So this is basically a concept is that mainly the thing is that when is trustless. This is called trustless, that you don't have to trust anybody. Anybody else? Yes.
I think for this purpose, what happens that government has created Ittihad Credit Bureau. So all that data about all banks are supposed to be bound to report for that. So that bureau can use the blockchain to assess everything.
Anybody else have any question? Yes. Yes. Okay, I tell you the difference. There is difference between public blockchain and private. You are talking of private blockchain. In private blockchain, it is already defined that who are the authorized to write the entry on the block. So it could be government. It could be like in the case that it will already predefined. I have skipped something like that. If I will tell you one thing here, if I'll show you. There is like in when you are implementing a blockchain, there are some things you have to go through that one, and this here. I think it's not clear. In this one, you have to define. There are 3 layers in blockchain technology. In one is protocol layer, second is network layer, third is application. In protocol layer, you define the protocols, whether it's a public blockchain or private. If it's a private blockchain, in protocol layer you will define that who is the authority to write the entry on the block. Like in private blockchain, DLD, government will be the authority. Means buyer and seller cannot write. So there is no minor in private blockchain. It's become a limited centralized one, but it is in the start I have already told you it's a centralized limited, but it is not centralized because government is not owning the complete record. The bankers, the buyer, seller, all are, you know, having that information complete with a limit,
So in case of that Bean example, so all the participating entities will be part of
No, because I have already shown you the last is not complete that one, that everybody cannot see everything like that. Like the certification authority will not know who is the owner, where the money coming, where the, to their extent there is, you know, limitation for that one.
So in that
protocol layer, basically we are defining here protocol layer. In protocol layer, you will get that one, that this detail that in when you are developing a blockchain, these things has to be done. You know, these criterias and key criteria you will define. So who will view what? You have to give the permission. Not complete permission should not be there.
So this Oxford.
This strategy program is that one basically. I study that one, everything like that. Like all the organization may not be using blockchain, cannot use the blockchain. So you have to check that the criteria, everything like that, that this company or this process require blockchain or not.
So in future there might be more standardization.
Yes, see the blockchain basically is a word. It's a distributed ledger technology which is used by blockchain. It could be other technology. The name could change. Today we are saying it's a blockchain, maybe somebody, some company, you know, bring, but the concept will be same, that the concept, it is a concept basically.
Now, as a developer, like how do I like prepare myself to be part of this?
This blockchain, basically blockchain developer, she's sitting over.
Okay.
There is separate language, like there is another language developed by C, you know, C programming language, C and JavaScript, that are the languages I'm using. So you have to do some development course for this one. Then only
like we don't have to develop everything from the scratch, but is there any framework kind of thing which we can utilize?
yeah,
to
there
build?
is available frameworks and everything.
Okay. Thank you.
Anybody else? See, it is not depending on the size of the company. There is a procedure for that one. We will get the copy. This strategic blockchain program. This thing that what the process is repetitive or not. The process is repetitive. Some processes are repetitive. It's not upon. Yes, it's depending. See this. See over there. This is in consulting. We are that one. We measure that. Okay, maybe the cost is very. Maybe you don't need blockchain. You need only a cloud, a dedicated cloud. So their software, your process need a dedicated cloud or it's a blockchain, and how much participants are there, what involvement are there. Basically, as per today, the requirement of blockchain is, as I mentioned, in which government is involved, in which the company is of very high value or volume, like taxation is involved, or like Adidas, Nike, and their aeroplane parts. So they need, immediate these things, or in which banking and transactions are involved.
When complex system is there, they must have to implement.
Yes, but
Like
the
because
simple
they
system later on today, that blockchain technology is not required for everything. Because it become like the same question is saying that it becomes centralized already. If it's between you and me, then what's the use for that one?
Yes.
Then it was like EDI system or
should
some cheaper system is already there, or dedicated cloud system can work out also.
Means we should have like all customers, suppliers, all align in
Yes.
the system.
If it is
Then
not
the
aligned,
benefit is going to come.
yes, you're right, correct. So that's why I said this is a technology of future, but future is coming very fast. Fortunately or unfortunately, that nobody thought that blockchain and everything will be, so rapidly capturing the market.
So what the courses, the softwares and are there, what we can do to
See, we are also launch this, like I have been contacted by American University Dubai also to do some courses for them in there. And then Skyline College University is also over there. They have been contacted us to
their
do
certifications there?
certification. Yes, they are starting that one.
Okay, nice. I think I will have contact. Thank you. Nice. Thank you.
Suppliers have, their suppliers didn't have this supply chain. How can it be helpful for them?
See, unless the complete cycle is there, it will not work. That's the same question he have asked, that one. Unless everybody in the chain using the same system, it cannot work. So if like in supply chain, like in Adidas, is sending, so their transporter, their broker, their general agent and everything, everybody have to be on the same platform, on same software. That it will work, otherwise it will not work.
Okay, sir.
Anything else? No question? Huh? Okay, thanks a lot for your coming over here. And Farooq is here. Mr. Farooq is there. And I thanks all you for coming over here and participation, and thanks to our I will request Mr. Farooq to have some word, please.
Thank you very much, Asif. It was a pleasure hearing you. And on behalf of Linchpin Training and with Asif Zaman, I'm really thankful to all of you who attended the seminar. In future, what we are planning is to have a full-fledged training sessions on this topic, which will be a certification, and it would be a full-fledged course, with starting from very initial stuff and then to the advanced level itself, which in due course Asif will be sharing with all of you also. And it's really upcoming. What we have seen is that at present the financial sector have a great interest in this. So if any one of you in future have planned to shift to such area, or you have a plan to have the business with such entities, I believe that blockchain is something which we should not miss at all. Thank you very much, and God bless you.
Thank you all for coming. That's it.